Uh, the tone was positive largely throughout the week, and both Nifty and Sensex, managed to reclaim the record highs and ended with a decent gains of nearly 1% each. On the sectoral front, also, majority of sectors participated in the move, wherein realty, FMCG, metal, media, banking, uh, pharma, they have all done well. While IT and energy, they were slightly on the back foot, means there was marginal profit taking in these two names. Now, coming to the stock specific performance, M&M from the auto space, uh, Grasim, Nestle India, ICICI, and Sun Pharma. They were the top gainers. So the good part is that almost all the sector or subsectors have participated in the move. At the same time, same from the auto space, we had the biggest loser also, Hero MotoCo, 8% kind of a cut. Then we have Coal India, BPCL. So what this indicates, this data, that how the markets are behaving and all. So it shows that yes, on the sectoral front, we are seeing all the sectors contributing, but within the sector, we are seeing mixed trend. So not all stocks are aligned in the same direction. That's the key takeaway from this data on the weekly basis. Now let's start with our view on index on the Nifty first. So as you can see that last week also we discussed about this broadening formation. This lower band and this the upper band. So after crossing this hurdle of 22,150, we've shared that 22,500, 22,800 is something that we are eyeing. But that's remained the case, though this week was a week of consolidation. The tone was positive. Good part is that we have tested this 20 EMA a day before on the weekly expiry day, and we rebounded very sharply, and we made a new record high as well. So this shows that yes, bulls are still under control, and the 22,500, 22,800 seems probable uh, until we break this 21,800, 21,900 mark decisively. So it's a buy and dip market when it comes to the index, but stock selection is something that one should be cautious of and focus more on identifying the stocks which are relatively doing better within the sector. Downside, as we've said, that 21,900 is going to be the first area of support. That's the 20 EMA, that's yellow line. And then this previous swing low close around 21,550. So tone is positive. It's a buy and dip market. We are holding 20 EMA. So everything looks fine. It's just that not all stocks are participating in the move right now. So stock selection become critical. Banking. So last week, we were discussing about the outperformance, probable outperformance. So it turned out to be a mixed performance rather, because yes, there were days where it clearly outperformed the index, but majority of the time it underperformed, especially in the last three trading session. What is the challenging part that we are seeing in the banking space is that the private banks are still not aligned. Means HDFC, if you remember that last time we've discussed about that once we cross 1420, then 1460 could be the next probable area. We've tested that mark in HDFC, and then again we are seeing profit taking. IndusInd Bank, Kotak Bank, these two are still witnessing profit taking, reeling under pressure. At the same time, Axis, ICICI, the two preferred names that we keep on saying on this webinar, they did well. So when we have, so it means private banks have the maximum weight in the banking basket. So obviously their performance dictates the trend. And that's why we are not seeing the index holding above 47,000 marks. So this line, this red line, this is somewhere 46,900, 47,000 mark. This is something that we should decisively hold. So there was one day, this green candle, this decisive, move in the index. Uh, but the next day onwards, we kept on struggling to hold these levels, and we are hovering around this band. So until we hold 47,000 mark, this gap that we have here is not going to get filled. And so banking, we still feel that there could be mixed trend. But yeah, the tone looks positive. Selectively in banking also, one can identify quality stocks. So like we'll discuss this in detail also in the stock presentation part. But I feel that in a banking, especially when we are still seeing challenges within the private banking space, stick with the top names is something that seems prudent. So 47,400 first hurdle. Once we cross, then this gap, this entire gap close to around 48,000 is going to be the next target area. Downside 20 EMA 46,300 is the zone that we have the first support, and next around 50 EMA, which is around 45,800. So largely tone is positive, but again one needs to be selective. Now on the stock specific front, what one should look at. So one stock from the railways basket, IRCTC. So IRCTC, after this sharp move from 650 to 1050, the last 5 weeks was a week of correction. But the week before and this week, it seems like that it has absorbed all the sellers, and it looks set for the move. Because why? In this particular week, it drifted below 900 mark, but ended closer to the previous close. And this week, it's a green candle. So means the profit taking and the correction that we were seeing in the stock seems over now, and we can gradually see the stock inching higher from the current level. So IRCTC is one stock that one should keep on radar on the long side in the next week. Next, since we are eyeing banking very closely, for the momentum for the outperformance, this one bank is basically holds the key, while others are witnessing a mixed tone. So ICICI Bank, this is the weekly graph of ICICI Bank, a clear uptrend, right? And though the pace means the angle of rise is not very significant, but still it's a gradual rise. It's very clear. At the same time, we are making higher lows. This first, second, and this time third. So we are making higher lows, means we are shifting, the buyers are shifting the base on the higher side. This is positive. Third, this area that the stock was currently trading in, we have finally crossed this mark. Means the upper band, we have almost, if you see this on the line chart, you'll understand. Means in the closing basis, if you'll see this price action, so this shows a clear breakout from the trading range. This was the range 1040 to 1000 levels. So this indicates that the outperformance that we keep on saying in Axis and ICICI, that may continue with recovery in the banking. So ICICI should also be near radar for the long trades. Lastly, not all stocks or sectors are aligned, means we are still seeing certain pockets reading under pressure. HUL, ITC from the FMCG space are still struggling. I guess we have discussed HUL or ITC earlier also, but still I feel that post this range breakdown here last week, it was a week of consolidation or a pause this week, and there's a possibility that this decline may extend and we can retest the long-term averages on the weekly chart. So if markets gives you the opportunity to go short, the preference should be given to HUL. So this is all from the presentation part. So just to sum it up, Nifty, Bank Nifty, bias positive, tone positive, but we are seeing selective participation now. So, buying anything and everything is not going to work. We have to be selective. We have to be specific that what we are choosing within the sector. Uh, Upside 22,500, 22,800, we have the potential. Downside 21,900 is the key support zone. Below that, the bias would change or negate or subside. Banking, yes, tone is positive, but mixed trend in the private banking majors is capping the momentum. So stay with the leaders, stay with the top performers like Axis, ICICI, they are the top performers. Apart from that, on the stock specific front, IRCTC alongside with ICICI is something that one can look at for the long trades, and HUL for the short position. So this is all from the presentation part. Now we'll do a quick poll, feedback poll, and then we can start with the Q&A. So please fill in your feedback, and once you are done, you can start posting your questions using that Q&A tab. Please quickly fill this feedback so that we can start with the Q&A. And if you're done with the feedback, you can start posting your question using that Q&A tab. All right, so let's start with Q&A now. Okay, it's detailed questions. So, a question from Mr. AT. Hero shares make a new high after November 2017. Underperforming 6 years and but now it makes a new high. Good results. It went down after the next day of the result, then again down in the current week. What's happened? It's half market cap compared to the Bajaj maintenance price, which 300 performance maximum time. Okay, so it's all about again Hero MotoCo, how the stock has been trading, since last 6-7 years. So see, generally we don't discuss about stock specific queries, but this query is something that I was referring to, that within the sector we are not seeing that all the stocks are aligned. So just to take you an example from the auto space, Maruti, we are trading at the record high, Bajaj Auto, TVS, these are the top names basically wherein we are seeing consistent traction. At the same time, we have seen a pause in Aisha, though the tone looks positive, Escorts, and Tata Motors. At the same time, after the phenomenal performance from the Hero MotoCo, now we are seeing underperformance or decline. Yes, I missed M&M also among the top performer. In fact, it was the best performer during this week in the Nifty 50 basket. So, it's normal that, in a week time or in a quarter, within the sector, you see some stocks doing, okay, some stock doing it phenomenally well, and some stock, not even participate. So it's not like that we have to take a revenge, or we have to prove ourselves right that uh, I have selected this stock and should go up for any reason, be it fundamental or technical. See, if the price is not reflecting that the stock is a good performer, then there's no point arguing with the market. So if the market says that Bajaj Auto is doing well in comparison to the Hero Motoko, and it's not seeing much reaction also during the corrective phase, then obviously it's a better candidate to look at. If somebody is looking for a low beta counter or counter wherein we are seeing consistent trend. So there's no hard and fast rule, and there's no specific answer to this key why we are seeing this underperformance. Uh, the stock is doing well, means it's reflecting its financial. Short-term fluctuations can be of both side. So trading is all about maintaining stop losses, exiting the position when the price says that the trend has reversed. So hope it answers your query. Okay, next, which is the best sector to buy on this for the long term in the present time? Mr. Tyagi, we have been discussing about IT. IT is the consistent name wherein we see uh, potential to do well after the year of underperformance, 3-4 years of underperformance, and alongside with that, obviously the private banking major is something also that one can look at. So IT and banking. Okay, so next is stock specific. So please request to avoid stock specific queries. Next, we have Mr. Rajesh Lal on election coming in the month time. Would it be wrong to say that Sensex will go for a downside closure in March? So again, instead of trying to predict the market move, I personally feel that trading in sync with the move is much easier, means following the trend is much easier. Uh, I wish I could answer this that, we are going to see negative in March and positive in April, and, newer highs in June or July. The reality is nobody knows. And be it election, be it any other event, the only thing that one have control of is his own risk. So in a market like this, where the trend is strong, we are seeing index holding 20 EMA. You know, there are occasions that we are seeing penetration of the same, but largely we are holding that mark. So this shows that buying interest on every dip. So instead of arguing with the trend, I feel following trend is much easier and beneficial for us. So as we have said that 21,900 first and then 21,550. These are the area where I'm keeping a close eye on. Below 21,900, I would refrain from aggressive long. Below 21,550, I might start attempting short position in the index also. So this is how one should look at the market instead of the events which are lined up ahead. Any sector specific queries, anything related to any stocks that we've discussed during the presentation, we are happy to answer. And talking about the other sectors, basically, that how we are seeing the market right now. So till last week, the other sectors, they were the one which was holding the index or pushing the index higher. But now the things have changed, not completely, but yes, partially. That now it's banking basically, wherein uh, we are seeing participation and wherein we are seeing contribution while others are witnessing profit taking. So I feel that next week, yes, one aspect which we closely track, but we don't get the time to discuss more in detail is global markets, and especially the US market, which we closely track. So, global markets and banking, these two aspects are going to dictate the trend, how we're going to behave in the coming week, and in fact, in the weeks to come, uh, in absence of any other major event. So, our focus area should be on banking when it comes to our, whether we're going to regain momentum or Nifty to inch swiftly toward 25,800 or not. So focus on these two aspects, just how the US markets are performing and how the banking index is performing. Rest, they'll continue to participate, and we may see gradual up move, but the momentum, the conviction on the market would only come once we have both these things aligned. Okay, so next is we have Nithya Lakshmi has query on. I heard from many of them that their money got doubled in 2 years, and still there's an opportunity for us to get our money get doubled from here. If yes, please suggest some stocks that for the wealth creation. So, you know, I understand that the FOMO, the fear of missing out, is playing out. When we hear those stories that my money got doubled in a year or two. Uh, See, when uh, we have realistic expectations from the market, then only we survive in a longer duration. Otherwise, we come up with the thought like this, that we should double our money in a month time or in a year, and we end up making bad investment choices. So these things cannot be planned, that this stock is going to be double. Yes, the other aspects, that it should be fundamentally sound, there should be tailwinds to the stocks, global scenario, everything is important. But my this stock is going to be double in next 8-9 months. I doubt that anybody can put a finger on any stock even today, or maybe in the past, those stocks they have done well. So please don't fall for such stories. If you are new to the market, the best way is to understand how the market works, and for that you have index funds, you have mutual funds, and direct equity, means in stock market, the Nifty 50 counters. So counters which are top 50 counters based on the market capitalization, you should invest in those names and see how the market works. And once you have hang on that, then you can start exploring the market in the mid cap and small cap space, wherein we see these kinds of performance, where your money gets double or tripled in a year time. But before that, just because that somebody has said something, please don't follow those advice. Okay, next we have agri stand on which sector. So Lavanya ji has this query. So basically, agri, when it comes to this our own markets, we have multiple layers to that. Means we have directly related counters, we have stocks which are indirectly related to this sector. So if you want to understand, means what all sector that one should look at, obviously the pesticides, chemicals, tractor manufacturers, and the exporters and importers of these products, agri products, is something that one should focus on, and that's a part of this sector. Okay. Okay, so this is something which is important. I guess I'm trying to just understand her query again from Lavanya, that holding which sector can control inflation, I mean to beat inflation, I'm sure, and serve uh, uh, for withstanding the Indian economy. So, see, beating inflation means on an average 6% is what the inflation rate is. And index fund, as like, I was referring to the previous query, that to start with, you can look at the index fund. So on an average, good index funds yield you a return of 13 to 14%, uh, on a year-on-year basis. So just to understand, just to uh, get the hang of the market, index fund is something that one can definitely look at. And if you want to participate directly into the equities, then top 5 name, top 10 names from the Nifty 50 basket. Even if you invest equally in those names, I'm sure that there could be occasion, means maybe a year of underperformance, but largely you will beat inflation by strong margins, is something that the data says. Okay. Okay, more of stock specific queries. So please avoid stock specific queries that I've requested earlier. And yeah, so all right, so it's more of stock specific queries. So I guess we are done with the questions. So next week, same time, we'll connect again, and